if I traded it all, if I gave
So
it
welcome back. I am so excited. I don't know how long it's been now. It's been about a few weeks for me to see you. I have David Fisher. He is the CEO of Landmark Gold. And I don't remember last time it was, but so much has been going on. I want you to tell everybody a little bit about what's going on, a little bit about you, what you do. And you're so interesting. Always when you talk, my eyes get really big always. Tell everybody about yourself and what you do and what we're going to talk about today.
Well, thank you for having me on your program. Obviously, I've been doing this a while, 22 plus years in the precious metal industry. I'm the CEO and owner of Landmark Capital, which is located here in Phoenix. Although we're in Phoenix, we're a national gold company, and we have many clients across the United States. We believe in education and facilitating people's need, helping them understand why gold plays such a vital part in silver in a person's portfolio. We're accredited members with the BBB, and we have no complaints at all, and A+ rating. And in our industry, there's something similar to that. It's called ICTA. We have the same standards that the BBB adheres to. We're members with them, and I'm a member of the American Numismatic Association. So I have a lot of affiliations, and I have a lot of experience. I've used to have my own radio program.
I was just going to say, you've been on the radio a lot, not just mine. Lots of them lately. Go ahead.
I've been on a lot of national radio programs. In fact, there's just another a radio program out of Boston that saw me on our website with you and contacted me, and they said, we're looking for a gold specialist, and we saw your video, and we said, you're so different from everyone else. Everyone else just pushes product, and nobody wants to really educate. They say, you got to buy gold now. It's like, you come from a different style, and we like that, and we think that's what the public really wants, is to learn what's going on and what drives gold and the reasons they should own gold, instead of just saying, come call me up and buy these 10 coins.
Right.
So,
and that's what you're all about, is educating
Absolutely.
the public. You have some things that you've written, and we're going to talk about today. Also, the last time you were on, you brought it's your private storage of precious metals IRA, as easy as 1, 2, 3, and I love what you've done. Please tell everybody a little bit about what that is.
Well, most people don't understand, according to the Taxpayer Relief Act of 1997, you can take and roll over your retirement, your 401k and IRA, and purchase physical precious metals. Most companies in my industry don't understand how you can take physical possession, and that's what this report talks about. You can actually, one of the two choices, the first choice is to actually never see your metals and is stored in a national government regulated depository. The other choice that 99% of my clients choose and have been choosing is taking physical possession of their metals in their hand, not in another person's depository, but physically in their hand, and there's no tax liability. There's no distribution. So we explain in this 8-page white paper, and I've been doing thousands of these the last 6 years, we explain in the 8-page white paper how can that be done legally, and what does the IRS say about it? And it was challenged, and the IRS lost in a court of law, and they now legally you can do this. And so not only is it just an idea, it's been challenged by the IRS years and years ago, and it is endorsed and it's allowable. But most people don't understand how it's done, and this report gives the detailed explanation of how you can have that. Because would you rather have your gold in your retirement in Delaware or in a Brinks depository that's government regulated, or would you rather have it in your hands? You can do both, but why not have it in your hands?
Also, you made it affordable.
Absolutely. Most of the 15 to 20%, and I think that's a high number of the people in my industry of companies that know how to do this, they charge somewhere between $9.95 to $19.95 for the legal fees. We have found a lawyer that we've used. He charges here in Phoenix for an out-of-state legal fee of $385. If you live in-state in Arizona, it's $350. So it's significantly affordable, and he does it in 2 or 3 days.
Now, we're going to open up the lines to the audience for everyone to get this. We want you to have his white paper that he wrote. We're going to be talking about this. This is the Coming Bail-In, which is huge, and you've been talking about it a lot, and you've sort of created an earthquake or a tsunami, if I want to say that, too. And also, everyone's going to get this private storage of precious metal IRA. It's as easy as a 1, 2, 3. It's 8 pages on that. Learn what that's all about. You do free consultations with everyone.
Absolutely. We have an interactive conversation that we help people understand, how to properly diversify and what would be the appropriate amount. They determine it. We don't tell them this is what you should do. We give parameters. If you believe this, if you think this, and you fear this, then here's what you should do. And there's several gauges that they're measured there on how much they should have in gold versus the other areas of investing: stocks, bonds, mutual funds, cash, and real estate.
Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. It's information. And what I love about that is you get it, you look at it, read it, see what you think about it, and if it's something that you want to do, then you pick up the phone and you get a free consultation from him, and his number is 602-287-9200. The website is landmarkgold.com. So, today, how long have you been in the precious metal business industry? I forgot what you said.
22 years.
22 years. Congratulations on that.
So we're just getting started.
So you really know what you do.
I would like to say I'm studied, and because I've done so many seminars and research papers, I'm actually coming out with a book.
I'm excited about that.
And I know, Carol, you're once one of many people that told me you need to write a book.
Right.
And
full circle now.
I've already met with a publicist. I already got my 10 chapters. I've written 1 chapter already. And I don't know how many free books I'm going to have. And I don't want to get into the book today, but just in the future, we'll talk more about it. I'm going to get some free copies for your listeners. They won't have to pay for it. My publicist will allow me so many of those. And because we have a long-standing relationship, I'm going to offer that for your listeners. And then we'll see how much they got to pay for it if they want to go to Amazon, that kind of stuff.
I'm so excited, and congratulations
Thank
finally,
you.
Because it makes it full circle, and people will love it, and everybody loves to read about it, and they love listening to you. David, you are very, very educational, and you make it very easy for us. And if I can understand it, anyone can understand it when you talk.
Well, we try to make it simple, but also it moves you towards what you need to be doing, which is engaging in your money. Because if you don't take care of your money now, it's not going to take care of you later. And that's what investing always is. Learning at what is happening and what possibly might happen in the future and moving your money appropriately.
So today, the Treasury and Obamacare. Banks in trouble. Let's talk about what we're going to talk about today.
On Monday, the New York Post announced that the Obamacare is looting the Treasury. I have the article right here. It's not hearsay. Do you know that the Treasury just paid, under President Obama, because he told them to, $7.7 billion this year to United Healthcare and Aetna, the 2 major insurance carriers for Obamacare, because they lost billions of dollars last year, and he's concerned that they're going to opt out, because if they opt out, there will be no Obamacare program, because nobody's going to want to be the carrier, the rider for the insurance company. This is breaking the law. The Affordable Care Act is really clear on what the guidelines are, and this is what it says. The text for the Affordable Care Act is clear as a bell on what money can be used for in what you call the annual fees, which recently have added up to billions of dollars a year. It belongs to you and I, Carol, the public. This is the Treasury. This is where we send our money to, the Treasury, not insurance companies. And the law states, quote, the fixed shares shall be deposited into the general fund of the Treasury for the United States and may not be used to offset insurance company losses, end quote.
Wow.
He's breaking the law. Now, you want to, people say, I don't know about this bail-in thing. This is the bailout and a bail-in. They bailed out 2 insurance companies this year, $7.7 billion. They bailed them out. And they bailed into our money called the Treasury. So when people say, I don't know if they'd ever do a bail-in. I was on your program on February 2nd. That's when the last time I was on. I listed 5 bail-ins that our country already did in the last 3 years in government funds. So this bail-in is a real thing, but they've shifted focus. Now the focus is on citizens' retirement accounts and bank accounts.
We're going to go to a break on that. That's scary. And our number here is 602-277-5369. Toll free, it's 1-866-536-1100. Call in, get his white paper, get this information, and chime in if you feel like it. We want to hear from you.
If I traded it all, if I gave it.
So welcome back.
all away.
We're talking with David Fisher. He is the CEO of Landmark Capital. We have our lines open here, and we are giving away a white paper on all of this that we're talking about right now that he's written. It's a brand new one that he just wrote. Also, we want everybody to get the private storage. A precious metals or IRA is as easy as 1, 2, 3. We want everyone to get their hands on that. David has our lines open here. You can either call in just for it. I know we got a couple of calls at the break, but if you want to call in, you want to ask a question, you can. If not, you can just get the information. Our number here is 602-277-5369, and toll free, it's 1-866-536-1100, because you can help anyone from anywhere.
Anywhere in the
Okay.
United States.
All right. So what is happening then in the market today? You just ended off with that was the scariest piece of information that you've said in a long time, or every time.
Well, it's usually something new. It's usually, here's another fact that proves that we didn't fix this thing since 2008. And here's another fact that proves that we're going down the wrong road. We're going further into debt. We're relying more on government subsidization, and pretty soon the government is going to not have solvent funds to subsidize these things. And that's where the focus is changing. But now banks are in trouble. I mean, most of the sectors of just about every single bank financial stock is down significantly this year. And what I found out is ties into the bail-in. See, at the end of the day, somebody has to hold the dollar. And how they hold the dollar is through our U.S. debt called a treasury. So here we have President Obama giving away free money from the treasury, which is illegal. We have, according to Jacob Lew, the Secretary of Treasury, that since the year 1978 they've been collecting data. Last year we had the biggest sell-off of treasuries in the history of the world. So the world is saying, I don't want to hold treasuries. But recently what happened is investors are now pulling out of the treasury market because they're talking about having negative interest rates. We're already in low interest rate environment. There's no incentive to hold the dollar. And interest rate is just an incentive to hold the financial instrument. So if now they're talking about having negative interest rates, so people are panicked. I got to get out of treasuries. So here's what happened. There's 22 what you call dealers of choice from the Federal Reserve Bank. They're called primary dealers. All 22 are financial companies. They're banks. And all 22, their stocks are down significantly. But the two that are most in the news is Goldman Sachs and Citigroup. Goldman's stock is down 27% this year, and Citi is down 39%. But here's the bigger problem. Wall Street biggest banks are boosting their treasury holdings to the highest level in 2 years. In other words, they're buying the treasuries. Why? Because they're the primary dealer. When you want to get liquid on something, there has to be a buyer. The buyer is the primary dealers. So they're taking all this paper called treasuries that the world doesn't want, and now small investors don't want it, to the tune of $113.5 billion just last week they underwrote. Okay, that's a lot of money. The figures are suggesting that investors should now be unloading securities on Wall Street in the banks. But the problem is the banks are having trouble reselling these. This is an article that came out of Newsmax today, yesterday.
Okay.
So it's mainstream media saying, here they're unloading dollars. They're the primary dealers. Their stocks are down. So think of it. Let's put the pieces together. Their stock is down substantially, 20 plus to 30% this year. They're buying this paper because nobody wants to hold it, U.S. debt. Okay?
And they can't sell it.
And they can't get rid of it. So they're a holder of a illiquid investment that the Fed is going to lower the interest rate on. So they're in trouble. But the problem is that they're getting hit with this, and this is causing a more perpetuation, and this is saying we're in a bear market of holding the dollar. So at the end of the day, somebody has to hold the dollar.
So is it us?
You just put your hand up for
Right.
all the people that can't see. Carol put her hand up saying, oh, that means us.
I didn't
Exactly.
want to put my hand up.
Okay. Goldman Sachs used to be the king of Wall Street.
Yes.
According to Fortune magazine in September, they're now the jester. They are having the riskiest operations on Wall Street. This is not my words. This is what Forbes or Fortune magazine is saying. So at the end of the day, somebody has to hold the dollar, and that's where the government has shifted their focus on citizens. And I want to explain this Dodd-Frank Act, because I was on a national radio station just last week, and somebody called in my company and got started. And I asked that person, tell me your little experience, how much have you heard? And he says, I've heard you on every national radio program on this one person. And I've been on there like 8 times, okay, since September. And he said, I also went to your website and I saw every recording of you and that lady named Carol, okay? He's referring to you. I go, wow, and you're just getting started? He goes, yes. I go, tell me, was I confused? What's the confusion? He says, how can I learn? He says, just talk a little bit more about this bail-in and the Dodd-Frank Act again and again, because people don't really understand. Finally, the light turned on for me. So I want to do that for just a second.
But I have a caller, so I have to have a caller call in real quickly, and hopefully we'll get to it.
All right.
Jay, what's your question?
Yes, Carol, I have a question for you and a comment also. Well, a question for Dave and then a comment after I'm done there. Dave, I've called in there to the show before and spoke to you about...
Here's the thing. Let me do this. Quickly ask a question because we have to go. Or we can't even do that. Can we get you connected with him after the show, please? Because he has something he's doing here right now, okay? We're going to get you connected with him. I'm sorry, Jay. I have to do that, okay? Sorry about that. Go ahead.
Yeah, I want to make sure we got this new information out with the Dodd-Frank Act. And I'd love to take your conversation and talk to you personally, Jay, so I don't want to have you feel like you got cut off. So call our company again, and we will talk here, okay, tomorrow. The Dodd-Frank Act just got modified. It was 838 pages. That's 848 pages. That's what got passed. And that is the bail-in record. The purpose of it was to stop all the Wall Street being, all the banks being bailed out. That was the purpose of this. But they shifted gears, and now they're saying this allows the bail-in. So no longer does the FDIC have the money, because if 2 banks go down, the FDIC is insolvent. Welcome to Goldman Sachs and Citi. Okay, there's just 2 there out of the 22.
Right.
But they modified this from 848 pages in 2012 to 8,843 pages. But since then, they've added about 30,000 pages total is now what the bill is. Mm-hmm. It's the largest piece of legislation in U.S. history. This is the bail-in. We're in a bull market. I want to everybody know I'm going public now. We're in a bull market in gold. I'm saying 15 to 30% gold this year. We've already moved 12%. I've been saying it on other programs besides yours earlier in the year. We're in a bull market in gold. We broke through a fundamental and a technical level. $1,200. That's the fundamental level. Also the technical level. So we have fundamentals, the debt, the bail-in, inflation. Because they got to take care of this problem in one of a few ways. They either got to inflate our way out of the problem to take care of our $20 trillion debt, which is what it will be when Obama leaves. They got to raise taxes double what they're at, and they're not going to do that. They got to devalue the currency substantially, huge percents, like a Mexican and Argentinian type of a devaluation, a 70+% to 90% devaluation, or they got to do a bail-in. Because they can't just keep kicking the can down the road because now the funds of the government are becoming insolvent. And that's why this is imperative for people to call my company and learn, get the facts. They're not going to be told they need to buy. In fact, this person that decided to invest, they said they've never been pressured. I've heard that over and over. You want to receive no pressure from my company, but call my company at 602-287-9200 and ask for these 2 reports. And you will be amazed at all the facts and how the government is now shifted in 2015 and 2016 towards people, not the government anymore, and not towards banks. Because banks can't bail us out this time. The Fed can't bail us out this time. The government can't bail us out this time. And it's now the people who are going to be the ones that will be left holding the bag.
So we have these two pieces of information here for everybody, too. You can call here at 602-277-5369. Toll free, it's 1-866-536-1100. You can learn what it is, this white paper that you just rewrote. Here's the new one. And it's all about the coming bail-in, how to avoid it from affecting you. We want everyone to have this in their hands. I can't imagine, every time you come on, I get more, my eyes just get bigger and bigger and bigger. And in some ways, I get angry that it's happening.
It does.
So you got to give him a call. He'll do a free consultation with you. He'll talk to you. He's not about pressure at all. It's about informing you. That's what this show is all about. So his number is 602-287-9200. The website is landmarkgold.com. Write this number down. Get the information. They do a free consultation. It's 602-287-9200. It's landmarkgold.com. I'm also going to let you call for the next 5 or so minutes if you want to call here to get the paper and all the work that we have here. 602-277-5369. Check them out. It's landmarkgold.com.
You should be mine across that line. If I traded it all, if I could